All right, so it's my week in review. It's actually my month in review because it's the end of July 2025 and the start of August. So let's see what happened this past week. The market had gone way up, was pushing all-time highs. For me, it went up to as far as 207, 250. And since then, it's dropped way back down to 193, 708. And let's see what happened with my trades. So I think since I last left off, I had this IWM 200 shares call that expired. I collected 108 on that. Then I did 4 contracts, 400 shares of IWM. This is against my Leaps call options. Collected 132, and it had gone to almost worthless, so I bought it back for $4.16, or about $1 per contract. And the next one was Amazon. This was just a put, and I collected $4.10 for that, and decided to free up some cash. Bought this back for $2.56, so I ended up with $1.54 on that total. This next one was a HOOD. This was a put, and strike price was 101. That was assigned, and I collected $4.45 on that. And so then I had this TSM. This was also a put, and collected $2.27 on that, and bought it back for $84, so I ended up with $1.43. Then this Amazon, this was I rolled this from a previous in June. I had this 210, which I had rolled before, and usually I'll go back and put the roll amount here and the cost in here, but I just did it in the same month. So I had to buy this back for $41.60, and I only rolled it up to $2.15. The price at the time had shot up to $2.30, and I didn't want this to get called away because this is also against some Leaps option that I have. So I don't want to have to buy these at $2.15 and then have to exercise my option at what's my option, $180, and then lose out on that money. So ended up buying these back for $41.60, and the premium I collected was $39.90. So I rolled this out to $8.29. So I was down $170 on that, but the extrinsic value of that was $8.50, and the intrinsic was $31.70. So I didn't want to roll this all the way up because when you do an in the money covered call, you got some downside protection. And what happened with Amazon is it actually went down to like around $2.15. So I'm glad I didn't roll up too far and get whipsawed back. So this is in progress, and we'll see what happens there. And this next trade I did a put on Amazon for one contract. I was assigned, collected $4.20 on that, and some more IWM calls against my Leaps. Collected $176, bought this back for $8.16. And this SMCX, I had been assigned this way back when, and the price during April when the market really crashed due to tariffs really went against me. So I kind of pushed this out to like September. I think I rolled this. It was expiring in September at a strike price of 76. And this had really come way back up. So right now, let's see what SMCX is at. It's gone down a bit, it's 62, but it had gone up as far as 74, 75, right around my strike price at the time in June. So I rolled this up to 80, and I rolled it out to December, and collected. I have 600 shares of this. I'm pretty well overextended, but I collected $12,228. Had to buy this back for $81.84, so I ended up with $4,044 in extra premium for rolling this out. So that's a big one. Really helped in my account this month. And if these expire in the money and it goes above 80, then I'll make the appreciation from 70, right around 75 to 80. So that's around $3,000, I think. Let's see. So if I take 80 minus, rounding up 75, that's 5 times 100 is 500 times 6 shares, 6 contracts. So that'll be an extra $3,000 that I'll get if this does expire and the shares are called away. This TNA, this is the same thing. It had gone way against me, and I was kind of holding the bag on it. And I hadn't quite gotten up to my cost, and my average cost of TNA of $41.83. So I decided to roll this out to $12.19 and roll it up to 42, which would cover my cost. Collected a little more premium along the way. This is what I rolled it out for. Usually, like I said, I would go back and put that cost in here in the previous month, but I just put it in here for now. So I rolled this. The cost to buy it back was $305. Collected $590. Ended up at $285 there. Someone had made a comment in one of my previous videos about, did you decide if I was going to sell this SPYI and IWMY and put it into HOOD? And I actually did do that. So I sold, if you watch that video, SPYI and IWMI. They weren't making me that much money. They were covered call ETFs, and each one was about $10,000. And so I sold my shares of that and did 200 shares or 2 contracts of HOOD, and I collected $890 on that. So that's better than the 100 to 125 that I was collecting from those each month. So that turned out pretty well. And then my last IWM was a buy to close, so I did another IWM here. The 4 contracts, this is against my leaps, and I collected $248, and I bought these back for $36. So all in all, with dividends and the interest I've received and my premium, almost made $10,000 this month, $96.72. At the time, my portfolio value was $203, $748. Right now in August, that's dropped down to $193, $493 last time I checked. But I've got some other trades here. This IWM, got some more calls at a safe delta 16, collected $240 there. So I'm just plugging away with that. And some more HOOD. I did a call on HOOD for the shares that I was assigned previously. That's in process. Collected $257 on that. Actually, these are not yet submitted. So I've got this HOOD 94 put, 2 of those, and a HOOD call for 102. So I might have to adjust these on Monday when the market rolls around, but I'm just putting them in here for now. So if these go through, that puts me up with the dividend I've already received to $14.45 already, and they haven't even really gotten into the new month much yet. So last month in July was really good, $96.72, and got rid of some stuff that wasn't making me too much money, the SPYI and IWMI, and putting that money to better use and making like $890 or $1,000 a month. You know, roughly it'll be between $400 and $1,000 a month, I think, if I keep going on HOOD with those funds. And so, yeah, doing pretty well. I'm pretty happy with how things are going. I do want to go to cash, I think, a little bit, because I think the market might be starting to turn around. The jobs report came in really not so good last month, and it was revised down for the previous months. So those jobs and the markets, that's usually good for stock market when companies lay people off. Stock goes up, but these are just the jobless and the unemployment rate, and it's not looking as good as it could be. So I think the economy and companies as a whole might be starting to tank. So I do want to maybe start going to cash as much as I can. I've got a lot of stuff out right now. Most of my cash is tied up. I got just $22,873, and a lot of that's tied up with collateral for these puts. I'm going to go to Thailand in mid-August. So if these expire 8/8, I leave on like the 12th or 13th for 2 weeks. So I'm going to probably just set up the rest of my trades after everything expires this coming week, out beyond the end of the month. So right around the end of the month of August or the early September. So you might not see some videos from me for the next few weeks, since I'll be busy having fun out in Thailand, and I'm going to set up some trades and still make some money. And but I'll just make the expirations a little bit farther out, 2 weeks or a month versus a week. And that's it for now. Thanks for watching. I hope you got some value out of this. If you did, please like and subscribe, and we'll see you on the next one. Thanks a lot.